Hey guys, Chris here with How to Tesla. So, with Tesla's recent historic run of 13 days in a row, finally broken yesterday, I thought I would kind of talk a little bit about where I feel it's going to be going, not only in the long term, but also in the short term. A lot of people, seeing that it's more than doubled over the last 6 months, I think a lot of people are wondering whether or not it's still going to be good to get in now. With the price hovering around $255, $260, does it still make sense to buy now? So if you're only holding for maybe 6 months to a year, I can see a lot of concern with as much as it's run up recently. So my take on all of this, what I believe is going to happen, I think we're going to have a couple of big catalysts uh, for the next 6 months that are definitely going to affect the price of Tesla stock. Um, from its all-time highs, split adjusted, it was just over $400 a share. It's still got quite a bit of room to go before it hits where it was a few years ago. Over the next 6 months, the big things that are coming up, we've got, I believe, Tesla's going to be announcing another gigafactory, which is going to allow for more production. And once we get that lower priced Tesla vehicle out there, we're going to need all the production that we can get to keep up with demand. So I think that's going to be one big catalyst that's definitely going to help keep the stock up. In fact, I think it's going to raise it from where it is now. The other is the macro environmental situation with the inflation and the high interest rates. I'm still, if you guys have watched my previous videos, I think everybody probably knows, I'm anticipating like an August to September is when we're going to start seeing that they're going to stop hiking the interest rates and start bringing them down. And when that happens, it's going to create an environment where people are going to be pouring more money in from the value stocks into the growth stocks. And we've actually already started seeing that. Anybody who holds growth stocks has made tremendous profits over the last 6 months. And it's kind of strange because a lot of the times the market reacts to those interest rates when it happens. But here, there's a forward-looking anticipation of them halting the rate hikes, and it's already started going up. Now, looking at your normal PE or PEG ratios, I like to look at the PEG for the growth stocks. I find that to be a much better valuation model than just a standard PE ratio. I like the PEs for the value stocks, though. But anyway, that's neither here nor there. Once they do halt the interest rate hikes and they start reducing the interest rates, you're going to see a big swelling in the PE and the PEG ratios in all these stocks. And although we've already seen it turn around, it's still got a long way to go. It still has a long way to go because a lot of these companies, based off of, you look at last year when they were all at their lows, there's not a whole lot that's changed compared to when they were at their highs, a year or two before. So now you're in a situation where a lot of these growth stocks who have done really well from a business standpoint, but their stock has come down. Once we get back to where we were a few years ago when everybody was hitting the highs and everybody was on cloud nine in the stock market, we're going to have a situation where they're more profitable, they've got more free cash flow, they're financially sitting in a much better place than they were. And then when those PE and PEG ratios go back to where they were, their valuations are going to be higher than their all-time highs. And you're going to see this with a lot of companies, and you're going to, especially, I believe, going to see this with Tesla. So once this macro environmental change happens, we're going to see a giant flood from the hedge funds and from retail investors. Retail investors are typically lagging behind what the hedge funds are doing, and I think we're seeing a lot of the hedge funds right now going into the growth stocks. So I do believe that we're going to continue seeing an uptrend here. I do, however, believe it's going to be slower than what we've seen over the last 6 months, where, for instance, Tesla's over doubled in the last 6 months. We're not going to see another doubling in the next 6 months. At least I don't think so. But I'm anticipating by the end of the year, Tesla should be around $320, and that's going from $260 to $320. Those are some absolutely amazing profits. Just not quite as good as what we've had over the last 6 months. But then again, for those of us who have been holding, we took quite a big loss last year. But we're definitely, I think, going to be looking at a slower recovery going up into those all-time highs that we had a couple years ago. Now, I believe going to announce another gigafactory. I believe that with these government rebate credits coming in, we're going to see that the sales are going to be more than what Wall Street predicted. I think there's a lot of really, really good things right around the corner for Tesla. And I think a lot of people are riding this AI hype train. And I think Tesla is one of the leaders in the AI space. People just don't really give full self-driving that full credit. And granted, it's been taking a long time to develop. It's not nearly where, you know, we've all expected it to be if you're taking Elon Musk's words to heart. Everything's definitely taking a little bit more time, but the neat thing with AI, if you watch the news at all, every week there's just all these tremendous new innovations. I mean, it blows my mind every time I look and I see something else that's absolutely fascinating that I would have never expected to see, you know, probably in my lifetime, let alone this year. And I think once people are optimizing and figuring out exactly how to really train and develop these large language models, and we start seeing the other advancements in the machine learning and the artificial intelligence, I think that this is going to speed up the development of full self-driving. And the neat thing about Tesla's AI with the full self-driving is, you know, if you look at the price for it, you know, either $200 a month or $15,000, a lot of the companies out there like OpenAI who are charging $10 a month, they need a lot of exposure, a lot of people doing this or that. Where with Tesla, once we really do have full self-driving and you're able to put your vehicle to drive autonomously, you are probably going to end up spending the money when you see the value for it. If you're able to put your Tesla on the robotaxi network, and then you can turn that money into money. You know, if you can make that money work for you, it wouldn't make sense not to. And I really believe that there's going to be a windfall for Tesla, especially for the full self-driving. That's almost all profit. It's just software. It's an over-the-air update. You know, we have all the hardware already built into the Teslas that we already own. So I think that with this AI hype train, once more people start realizing the impact of AI at Tesla, we're really, really going to start seeing a lot of that money coming into the Tesla stock. I think we'll get a good announcement for a new gigafactory this year. I think we're going to get a lot of easing as far as the interest rates go. I believe that inflation is going to continue coming down, and I think that we're going to set ourselves up for another really, really nice and long bull run. And I, for one, am super excited. So I'm guesstimating end of the year roughly $320, and I'm going to keep on holding on though. I am not going to sell anywhere near $320. So anyway, that's just my 2 cents. Hope you guys enjoyed it. Talk to you next time.